When it comes to money, it's all about how you think. And we need to think like a business owner. So let's explain a little bit about what I mean by that. Well, now, most businesses work on a 12-month basis. Now, the business doesn't stop during those 12 months or stop at the end of those 12 months. It continues to go, but that's how we measure the progress of the business. And most businesses use a calendar year. So they're looking at January to December. Okay. And the goal of the business is to have profit, pay our taxes, and have the residual. Now, because of this, and the reason that this is the goal, the profit is the focus, is because most business owners don't use financial instruments and put their money in financial instruments. They put them in hard assets back in their business, back in buildings and land, and of course, cash, right? And so the business owner knows that the most profitable thing that they can do is invest and run their business. But their business profits, they don't come in just consistently throughout that year. They come in seasonally. So the revenue, the sales, all of those things, they come in sporadically or seasonally, like I said. In fact, sometimes businesses can have all of their profits in 1 or 2 months, right? Or all of their sales. But here's where the problem comes in is their payroll, their rent, those other expenses, those are more consistent. And their customers, okay, the people that owe them money, so their accounts receivables or ARs for short, they normally buy on credit. So they might get 30-day terms, but they might not pay for 60 days or maybe 90 days. And that's really when things start to get uncomfortable when you're calling them and saying, "Hey, I need my money." Now, why do I need my money? Because I've got account payables to my suppliers who may give me terms, but they're not going to give me 90 days. So what do we do because of that? Well, because we have credit, because we give credit, we have some cash management issues or challenges, I should say. So that's where the role of the commercial bank comes in. Now, the commercial bank, assuming that our business is in pretty good shape, they'll give us lines of credit, which are interest only loans, and then they'll give us loans, which are amortized. So maybe for equipment or vehicles, things like that. Now, those two different types of loans are really important because if we could, we just get lines of credit so that we control the payment back to ourselves. But that's not how the bank does it. And by the way, the bank also wants us to put all of our deposits in their bank. And if you've watched our video on how banks make money, you'll know why they want you to put your deposit in the bank. All right. So the bank, though, they don't give anything without some collateral, right? They don't give you any money. They don't give you without, maybe there's land or property or inventory that you can put up as collateral, maybe merchandise, your labor, meaning a personal guarantee. It could be equipment, capital equipment, but the bank is going to be secure in a bankruptcy. So if the company struggles at all, the bank's going to call those lines of credit or convert them to loans so they can get their money, right? But this is a challenge if a business is struggling or it has a tight season, right? A tight season of money. And by the way, your suppliers, they're not secured. If in a bankruptcy, the bank's going to get 100% of its money back. The suppliers, they're really going to get pennies on the dollar. Okay, so what if there was an alternative bank? A bank that we could use that had tax advantages, had flexible loan terms, and it paid dividends. So it was actually higher performing than the traditional bank. Well, that sounds really good too, right? We're controlling the banking function, not the commercial bank. But, people say to me, "Jim, then it's not as secure. My money's not as secure. I have FDIC. I have insurance on my deposits with the commercial bank." Okay, I don't want to burst your bubble, but let's explain that a little bit, okay? Number one is the FDIC reserve in 2017 was $88 billion. In that same year, the total U.S. bank deposits that they were insuring was 7.1 trillion. So that means a little over 1% of your money is actually insured. Now that you know that and see this, is there any reason why you wouldn't want to look at that alternative bank? Why you wouldn't want to control the banking function in your life, your business life, and your personal life? If you want to learn how to do that, go to createtailwind.com, sign up for a free coaching session today. It's free. Like I said, do yourself a favor. It won't cost a thing. You'll learn something, I promise. I'm Jim Oliver, founder of Create Tailwind. Thank you for spending a few minutes with me today. I hope you enjoyed our video.